literally. So I was like, okay, let's do that.
Yeah, nice.
Welcome, gentlemen, ladies and gentlemen. I want to get I had a cool intro video for my last show, and I want to get one built for now, and like just kind of flash and bang introduce the guest. But we are here with Andre. How do I pronounce your surname?
Or just go with the first one. Just say Andre.
Just Andre
That's good.
G.
And
Andre.
the other one is Güttler, but that's a special character in German. It is horrible. It screws up everything. So just say Andre. I'm happy with that.
Is that the E with the two dots?
Yeah, the U
Yeah,
with the two
Gutler.
dots. So
And
this
Aram Mukhalian in the house. So, again, also, make it nice and 30. Due Bitcoin, we are here live coming at you with a professor. We had a little bit of a break. Aram and I took a little bit of time off. Aram's in a new location. I'm wearing a black shirt, and we're sitting with the professor Bitcoin, as we call him. So, welcome to the show. Andre, Aram, before I get to our guest, Aram, how you been? Give us a little like vibe check. How's your move been?
Pretty good. I was briefly in Dubai, transiting. Now I'm back to Asia in beautiful Bangkok. I'm gonna be here for pretty much the whole summer and beyond that, maybe until Token 2049 in October because the one in Dubai got canceled. So yeah, I'm gonna be spending the time here in Asia. Miss the region. I was back home in Armenia during the cold winter months, but now the winter's over, so I'm back to Asia. I'm the kind of crazy person who likes cold weather, so yeah, I went back for some family reunion, Christmas, and some cold weather, but I'm back.
Nice, bro. Asia is. I wish I could come to Token 2049 in Singapore. Maybe I will. I mean, I had tickets for the Dubai one. RIP to
I think
that. We were supposed to be. It
if
was
you have
supposed
a
to be right
ticket,
now.
it automatically got transferred to the one in Singapore, and I think we met in Singapore the first time was like 2 years ago. It's in person, so it's kind of crazy.
Yeah.
Yeah,
Yeah, I mean Singapore was huge. It's really massive conference. I wish my hotel and flight accommodation also transferred to Singapore, but that's a different story. But yeah, I mean RIP to Token 2049 Dubai. Hey, I was supposed to be there now. I was supposed to take off today. I think right now, be in the air, touching down Dubai for the first time, meeting all you guys, getting up, getting down and dirty on the boots. But the Lord had other plans, and we instead got some ballistic hardware sent in our direction. But I'm sure the Singapore one's going to be great. And yeah, I'm traveling next week. I'm going to for a wedding in Italy. Actually, it's going to be really cool. So this week we have an episode. Next week break, and then we're going to come at you with some more. I think we'll talk about a bit about where we are in the cycle, but I think we're one thing I feel for sure is that we're kind of bottoming, right? We've with the extreme fear is behind us, and we're sort of getting into a new stage. Call it early spring, right? There's kind of different energies in the air. The energy of hope and optimism for it is starting to creep in. Or maybe I'm wrong. Maybe I'm the forever delusional bull. Andre, welcome to the show. Tell us a bit about yourself and like what am I? Am I on the money here or am I a little bit crazy?
Hey guys, yeah, thanks for having me. It's actually my first time on the LinkedIn live stream, so I wasn't even aware that this exists. So I know that many people do that on X, formerly Twitter, which is obviously where all the crypto crowd is meeting, and I'm with you, Aram, that real crypto people should also come to LinkedIn. So that's why I'm here. I'm a professor of finance at Ulm University. So Ulm is a city that's relatively close to Munich, so in the southern part of Germany. I've been a professor of finance since like 13 years, and I specialized on very boring things like traditional finance things like banking, credit risk, mutual funds, all these things. And then, like in 21, I completely moved my research interest in decentralized finance and crypto because I had a feeling that this will be, the new backbone of our financial system. And then, studied Bitcoin and did some lectures on blockchain technology together with, my colleagues here from Ulm University. did a few of like more practice-oriented seminars with the students, and just learned a lot about the sector. And yeah, if you ask me where are we in the cycle, it's so hard. If I knew, I would be on some island, obviously. At the end of the day, it really depends whether you are a trader or whether you are a long-term oriented person. If you're a long-term oriented person, then dips of like 50% in Bitcoin price is obviously always a nice occasion to, buy the dip. If you're a trader, that's a different animal. I'm not commenting on that, but I'm really looking forward to chatting with you guys.
Awesome. I'm very curious, to get in from the beginning. Aram, I've never heard about your university experience. Like, I want to share mine, and I think, I guess whatever you did at university, you didn't study much crypto. So I'm very curious as to how that changed. Like, for me, I studied statistics, actuarial science at university. I graduated 12 years ago, right? So 2014. So I'm not a boomer. I'm more like an unk, not Gen Z young. Like, I'm not fresh out of university. I've seen some shit, but I'm also not like graduated in 1980. Like, I'm not that old. So back then, it was zero thought of even having blockchain crypto in the university. We studied we had laugh tables, right? So actuarial the science of calculating premium, and you talk about credit risk. So actuaries are the ones that are pricing the risk, the insurance premiums on shipping containers through the Strait of Hormuz. What you need like data about the risk, and then you need data about the payoffs, and like you need to be able to take that together and quantify the risk, and that's how the insurance premiums are calculated. So we used to use tables in paper. Like, it's not like we had an API that had all the mortality rates and all the rates of default. We had paper. We had to go look page 5, put the number, and then page to the next, and we had to do everything manually. And it was just, that's part of the reason why I hadn't practiced a day in my life, because I was like, the world is going to Mars, like to super intelligence, and you're still using paper. So how has university changed? Like, Aram, what was your learning experience like?
So we didn't have any crypto. I didn't have any crypto in my undergrad. I didn't have any crypto during my MBA, although at that point I already was holding quite a bit of ETH. That was 2019. I purchased in 2017 my first Bitcoin and some Ethereum. But yeah, like there were no crypto, no blockchain. But what happened was my business school, INSEAD, which is one of the top business schools in Europe, it started offering a lot of blockchain courses. So I have been seeing a lot of people who have INSEAD on their LinkedIn. And when I go to that and I click, I see that they didn't do a degree at INSEAD, but they ended up doing some blockchain course or certificate online, which I think is still pretty cool. And now they have a lot of blockchain courses, I'm like, okay, that's pretty good. And a lot of these people are from traditional TradFi background. So these courses are not super technical. These are courses for people with traditional background to understand what is crypto, how it could be useful for traditional finance, etc. So with a bit of a lag, my university is catching up and offering a lot of courses. But yeah, during my time, it was still very traditional MBA program.
Yeah, that's good to hear that people, obviously back in the day, there was the University of Nicosia. I think they still do, but they were like early on in blockchain education. And what's the lay of the land today, Andre? I'm curious to your personal experience at Ulm University, but also, more broader, like what are the top other universities in Europe doing? What are the Ivy League universities doing? Like, how is the academic world teaching this kind of subject?
Yeah, it's actually pretty funny. So economists are really the last people who believe in crypto. I really talked to many like super smart people, and they were like in the early years, oh, that's all a Ponzi. There's nothing behind. They really had a very hard time accepting that this may be a new form of money because of their education. So it was no surprise that it was not always the top schools that accepted, and did these courseworks, but just some people who were convinced, who did the reading and understood and accepted something new, who started doing, teaching those classes. So I would not say that it came from the top universities and then, like top down, and then all the, let's say the medium tier schools started, and then the lower tiers. I think this was completely random. You just need one colleague at least who was like, okay, I go for that, and I offer a class. And that's why it's completely scattered. So we have some top scholars in Europe, and some of them form a research group, or let's say in Frankfurt we had a blockchain center. Now it's a bit more AI and fintech, so it's a bit broader. We have some relatively large hub in Munich, and then we have some other colleagues in Switzerland who are also very active. But it's really depending. It's really person specific. So you need to have one person who is really into that, and then talk a few colleagues into giving more research on these topics. And of course, that's on the business side. Of course, at the computer science world, it's different. So they were very, very early, obviously, in that field. And I have one class together with a computer science colleague. One of his students was even developing, I would say, advancements to the Monero protocol. So they were really deep into the tech, and together with a lawyer who is doing the regulatory things. So we have an interdisciplinary class, because you need to have the tech, the biz, and you need to have the regulation tech stuff together, that you have a meaningful understanding. That's how I see that evolving.
Epic. I want to just kind of talk about the first thing you said, which is the economists are always late to the party and they hate Bitcoin. And for me, economics is not science in the way that physics is science. Like economics has a social science ideology aspect to it as well. Like a physicist, you can do an experiment, and there's a hypothesis, and you test that it's right or it's wrong, it's true or false. An economist two economists can look at the same failed state, or the same business, or the same global organization, and they can see two different things, and that's influenced by the ideology. And what am I trying to say? The economists of today, most of them subscribe to the Paul Kruger, to the Paul Krugman, the John Maynard Keynes ideology, right? What's called MMT, which is the idea that the central banks should control the money supply by printing money, that the government should have this kind of carte blanche on how to create, on how the money moves, on how the money operates, as opposed to Austrian economics, of Hayek and Mises, who believe in hard money, who believe in the concept that we as Bitcoiners hold to be near and dear. And because the classical school of economics serves the masters in treasury and at the central bank and in the government, these are the ones that are pushed to the high positions in the universities. They pushed on New York Times, and the Austrian economics becomes a sort of like niche, kind of exotic field that is reserved for weirdos. And what Bitcoin did was bring Austrian economics back into the conversation. So I think incredible to hear that you're taking this forward, and that you have colleagues taking it forward all over the world, because that's the only way we're gonna beat them, is if we're in their halls of power. And when I realized that, I kind of like a glass shattered in my head, that the governments and politicians and central bankers, they control what you think by putting their mouthpieces into the institutions that are shaping your position, your outlook. And the only way to fight against that is to read a little bit about Mises, about Hayek, about what it means to have sound money, what it does to the nation's fabric and morality to have sound money, as opposed to this corrupted money. That's enough for me. That's a rant. I'm passionate about that.
Do you remember the story? Sorry, at Davos, I think there was the conversation between Brian Armstrong, CEO of Coinbase, and the central banker of France, and they were talking about the Bitcoin. And I think the central banker of France didn't have a clear understanding of how Bitcoin worked, and then the Brian Armstrong had to explain to him that it's decentralized, you cannot control it, etc. So this goes on to prove that again, a lot of senior people working in central banks, a lot of regulators, they don't have really this basic understanding of how really crypto works, how it operates, but you can censor it or but you can censor it, etc. So that's another interesting thing that you have, and that's like literally happening in 2026.
Yeah,
Yeah.
I remember that. I remember that. I remember that talk. That was legendary. But Andre, I also like what does a semester at Professor Kutler look like? Like, what are we learning? Are we opening? Are we getting rugged on Solana to get some real world experience, like buying shitcoin? Scam Altman. If any of you caught that runner, Elon was calling Sam Altman a scam, and we had a mini pump on a scam Altman meme coin last night. What do you learn in your course?
I mean, honestly, the most important thing is to start very simple, that people really understand Bitcoin, right? I mean, really understand what is it, what are the necessary conditions that you have decentralized, permissionless digital currency, right? So how does the node network works? What is proof of work? And from there, you can then go to, okay, that's like, once this framework is set, you can talk about smart contracts. Like it's enough if you talk about Ethereum and EVM, then typically students have a lot to digest. I mean, you don't need to go to Solana and to whatnot. If they understand these two kind of like, and then proof of stake, of course, with Ethereum, if they understand these two, I would say, different protocols, I'm super happy. And then based on that, think what are the important use cases, right? Of course, you talk about stable coins and the like. And that's really the basis. I rather focus on less concepts, but deeper, right? I mean, we go to like, even if you have to show them very simple proof of work mechanism in some program, like you go into R, which is statistical software, and you show them, look, it's not complicated. In this line, you create the first block, then you hash it, and the hash of the first block is then also an ingredient in the second block, and then you hash it, and then you link those blocks. And what is difficulty? Look, difficulty is how long it takes to find a new block to solve the puzzle. If there are more miners in the game, more powerful miners, the difficulty goes up. And these very simple things, you can show them line by line in the code, and they see, oh, damn, this is not complicated. This is really like, if journalists talk about Bitcoin mining, this is a complicated puzzle. No, man, this is just hashing. You just hash the fucking block. It's not complicated. Don't make it sound complicated. Everyone can do that. It's one line of code. So, deciphering what is behind the code, I think that's the most important.
Do you get them solving proof of work by hand with like I used to do it with a glass table?
Of course you can do that, but it doesn't make too much sense. Just show them the core components of the code, not with all the bells and whistles, but really just like, look, this is the content of the block. Now you hash it. If you change stuff in the block, the hash is different. If you just get these very simple things, they have a much better understanding of the protocol. And then they also understand why this is so important, that they can download the software and participate in the network. And I think that's the main mission, to activate the students, not just to tell them, oh, this is how it looks like, but really to let them make a wallet, let them make a test transaction. Next week I will have a little, we call that late night of science. I will show them just one of these small lottery miners, right, where you have one of these ASIC chips and these very small bit axes. Just show them, look, that it's you don't need a massive machine to be part of the network. It's like even kids can do that. It's not hard. Of course, on the industrial scale to make money, that's hard. It's really hard. But I'm just saying the network per se is relatively stable and simple. And that's basically the mission. Understand the core concepts.
And what's your students' reaction to all of this? Like, are they coming in with some knowledge about crypto? Are you changing their minds? Like, how are they reacting to this? All this first principle teaching that you're doing.
I mean, some are super interested. Some just chill in class. You never know. Maybe they have 1,000 Bitcoin. Maybe they don't get it. It's very hard to look to inside of their head. Some already have some experience, mostly also with some shitcoinery. That's just easier to invest. I think many are intimidated by, a Bitcoin is now $70,000. I'm too late. You know all these things, right? I mean, everyone had this experience. I entered the space when Bitcoin was at 1,000. Then it was running to 2,000. It was like, damn, missed it. It's too late. It's so expensive. That's it. Having this stock market. I was born and raised in the stock market, right? And 100% run typically then for this cycle, the stock already did what it had to do. And right now it's like 70,000 or 80,000, and people see that and they have the feeling, I have only $100 to invest. I'm too late. I just buy, whatever kind of Dogecoin or whatever kind of new shitcoin is on the market. Of course, burning the fingers and then all of that. So the main teaching thing is it's okay to have just $100 in Bitcoin. Make yourself familiar with the tech. Make yourself familiar with the wallets. And once you have a job after graduating, DCA a bit every week, every month into Bitcoin, but also into stocks, into ETFs, and you're good, right? Don't kill yourself by overcomplicating things.
DCA and chill. That's what the prof is telling you. Don't go hunting the wild catchers. And look, I see it starting to pop up. Like I see people starting to start, dropping the FOMO on X, and it's so easy to fall into it, because the one thing that Bitcoin teaches you more than anything is humility. Because whenever you got in, there's always someone who got in earlier than you and made like ungodly gains. And the deeper you go in crypto, the more like, when I was kind of growing up, there was a certain law. You have to work 10 years, then you get to partner, and then you get to founder, and then you get to VP or executive, and only in your like 30s or 40s you start making money. And you have 18-year-olds, 19-year-olds, 20-year-olds that are flipping meme coins all the way to $1 million. But a lot of that wealth, easy come, easy go. You're seeing people round trip crazy, and the best advice that the prof can give you and that I can give you, and I assume Aram as well, is like, take care of basics, learn the basics, because then you have much more conviction. Like my conviction in Bitcoin is rock solid, right? And that's why I'll keep DCAing probably till the day I die. But my conviction is maybe too strong, but that's the way to build conviction, is just through knowledge, through inspiration. And that's definitely a way forward. So the dog, if you're asking the dog, Bitcoin is the way to go, right? And all these things you explain, it just shows how much depth there is to Bitcoin. Before you go to stable coins or Ethereum or smart contracts, just in Bitcoin, there's so much depth. And I want to bring that to our first topic. You didn't even ask for topics, Andre, which is incredible, because I know that you're going to riff on anything we give you. But the first topic, while we're on Bitcoin, obviously the talk of the town right now in Bitcoin is the big scary quantum computers, right? So Google published a paper that sort of set the timeline for Q-Day. Q-Day being that point when quantum computers will be able to sort of break the encryption that makes Bitcoin secure. They put it at 2029. So there's obviously a lot of debate now in the Bitcoin community around how to respond. Some prefer to bury their head in sand, and some are more aware. Some are being completely alarmist of the, so on the other hand, like you've got people like Nick Carter who, wake up everybody, there's a fire. And then you have a whole spectrum of views in the middle. So, Andre, what's your view on that? Aram, I'd like to hear from you as well. How is this something that you're dealing with in the university as well? And how do you see in general the Bitcoin quantum question?
I mean, it's obviously a threat, and obviously we need to do something as a community. So we cannot behave and like nothing is going on. So a hand into the sand is no good strategy. And I think at the end it goes down to one very, I would say, important question. What do you do with old coins like Satoshi's coins and dormant coins? And that is a very delicate question, because everyone who can migrate their Bitcoin to a safe address will probably be fine. And I'm relatively optimistic that we get to a new standard where we have like quantum resistant Bitcoin technology. I'm just saying that very generally. I'm not the developer, so I cannot give you the exact details here. But I'm pretty confident that we have that in us. The only question is, what do we do with Satoshi's coins and these types of things? And there are two camps. The one camp is saying, don't touch them. It's permissionless. Never touch coins. We are not Ethereum. We're not Solana. We are not touching coins, right? These are the purists. And the other camp is saying, oh no, we need to freeze them, migrate them, do whatnot with those coins. It's a trade-off, right? I would probably be rather on the purist side and say whatever happens, happens. And if there are like 1, 2, 3, whatever, how many million Bitcoin being redistributed, then this will probably crash the market for a while, but we can digest that. And I'd rather be on the pure chain than on a chain where a few million Bitcoin will be redistributed in whatever manner. But yeah, it's a very tough call.
Yeah, I think, I don't know which way it will go, but here's what I think. If it goes the way that we're not going to touch them, I think what's going to happen is that US government is going to use its quantum computer to hack and seize these coins, because they're going to say, if we don't do it, North Korea is going to do it, or some other bad actor is going to do it. So we're proactively going to seize it. So essentially, US government is going to use that and hopefully pay back part of their debt, because I think recently they were asking for some donations. So they're going to take that Bitcoin from Satoshi and essentially pay back their debt, or just maybe hold on their balance sheet. That's the most likely scenario. Or maybe Google is going to do it on behalf of them and just hand over to the government. But the other option is that these coins are burned. And I think that's going to break the promise of Bitcoin. But you know what? I'm kind of looking a little bit into the future, like just beyond 2029, which is the latest estimate for the Q date. I'm looking at the economics of securing the Bitcoin network, right? So you have the Bitcoin halving every 4 days, the rewards given to miners is being held, right? So a lot of people don't realize, but about 99% of the rewards given to miners, they're not the Bitcoin fees. They are the block rewards. Actually, the Bitcoin is inflationary, right? And there is a maximum cap of 21 million. But what don't people realize is that first, Bitcoin is going to run out at some point. It's going to be by 2140-ish, something like that. But actually, the rewards to keep miners operating, especially given the demand that they are seeing on the AI side, that point is going to come much earlier, because even if you make an argument that Bitcoin's price is going to double every 4 years, if it keeps compounding at that rate, at some point it will be more than the GDP of the whole earth. So you literally can't have an asset that is worth more than the whole GDP of the earth, right? So it just doesn't make sense. So at some point, it's not going to be profitable for miners to keep mining Bitcoin. And then the question is going to be, who is going to subsidize it? So at some point, either it's going to be governments who are going to subsidize the miners, and then essentially at that point, Bitcoin will become a centralized entity, or we have to break the promise of Bitcoin and introduce some sort of annual inflation, because the promise that, we're going to have so many transactions on Bitcoins and fees are going to compensate for it, that's not going to happen. So even if we solve for the Q date and the Bitcoin is quantum proof, what about the economics of securing the network? And that's another question that people don't talk about, and they kind of push the can down the road. But I think at some point we also have to face it. And I would be also curious to hear what Andre and you do have, like, think about the economics of securing the network.
Look, I think in 2140 is the day where the mining rewards dry up, right? And let's say in another 50 years they become like too little to really matter, But I think by then, Andre, you might remember there was something called Bitcoin ordinals and runes and that kind of stuff. That showed how much demand there can be for Bitcoin block space. Now, runes and ordinals in their current form, they didn't hold water for very long, but the concept is there. Like, Bitcoin block space can and will be used for things other than send and receive transactions. That's what I believe. I think that's why I'm not so worried about the fee dilemma. I am worried about the near-term quantum risk, though. I think freezing Satoshi's coin will definitely create a fork, right? And then, and then it's just a bad precedent, because obviously all the BlackRocks and the Sailors of the world will prefer the fork where Satoshi's coins are frozen, because they want number to go up. And then you'll have this kind of puritanical, Bitcoin classic where the Satoshi's coin was stolen from. And, that doesn't kind of jive well with me. The other option is that Bitcoin decides they don't want to fork, the community wants to stick together. There's no freeze on the quantum safe coin. And then what you said happens. Like, America tries to hack it, or North Korea tries to hack it. I think what people kind of think, the idea that the first people to get to quantum supremacy will be some hacker group that will instantly dump it. Like, even North Korea, they get if they get Bitcoin, what are they going to sell it for? US dollars? They are sanctioned everywhere. They're going to use it to buy some oil from Iran and to buy some metal from wherever. Like, they're going to trade with it. So I think the bear case for any one of the scenarios in the quantum risk, whether you freeze Satoshi's coin, whether you don't freeze Satoshi's coin, I think the bear case is overestimated. People are freaking out too much, because even if hackers do get the coins, I think the idea that they're going to just instant dump is not correct right now. But we'll see what happens with Satoshi's coin. I want to move on to something else that happened this week, and that I'd love to get your take on, and that is DeFi United, which was a bunch of protocols, Solana, some Arbitrum, a few DeFi protocols on Ethereum. They came together despite being competitors to bootstrap the Kelp DAO loss to kind of help make DeFi whole and help Aave get out of the sticky situation where a lot of their stablecoin pools were maxed out. People were borrowing out of, people weren't trusting Aave, and they were sort of the first real massive DeFi run on the bank. And DeFi bailed itself out, which is huge, because I'm sure Andre can tell you more than I can about the history of bank bailouts and bail-ins, and DeFi went a completely different route with DeFi United. What's your guys' take on the move?
Eran, do you want to take first?
Yeah, I think this is a great move. This is a great initiative that I even made a post about it yesterday, that it goes on to show that the industry is coming together and they are putting away their competitive differences, because they understand that one of the core promises of DeFi was this ability to build on top of each other, right? It was the composability. And then if one of them is affected, you can't just stay away from it. Unlike traditional banks, which, like, if one bank falls, like happened with the Silicon Valley Bank or Lehman Brothers in 2008, other banks were more or less okay. Like, here you have the layer 0 breach affected, and then it's affecting Kelp, and then the Kelp is affecting the Aave. So, like, there's a chain reaction, right? And then if Aave is affected, other users are pulling the money. So, and that's having a contagious effect on other protocols from where people are also pulling their money. So it's having an impact on the whole DeFi ecosystem. So I think this is definitely a great thing. However, like there's this interesting thing that I was looking the other day. Like for example, some project said that we're gonna put it to a vote, and I think it was EtherFi. And I went to that snapshot, and I think as of yesterday, like most of the users actually rejected that proposal, so which was a bit unexpected. Overall, I like the idea, but I saw like that. I think in EtherFi there was a bit of a pushback from their community, and yeah, so it's overall it's a good move, but I'm curious to see when actually funds will be transferred to Aave to say how it works out. Yeah, I'm optimistic, but I'm looking to see through the execution of this.
Yeah, I mean, obviously, this was a positive initiative. I mean, they have my applause. The main problem is that you have such hacks almost on a bi-weekly level, and you can hardly always get such an initiative like with positive outcome. So at the end of the day, it is very fragile, and let's see what happens with the next few hacks. And yeah, it's also some self-cleaning. I don't know. Somehow I feel that the whole DeFi sector needs to rethink how they operate, how much risk they want to add, and yeah. So it's definitely not sustainable that you have these rescue, initiatives every 2 weeks or so, or once a month. Even once a month would be too much, because at some point in time, that it's just not working out again and again and again. Because those people sit on some funds, on some DAO funds, on some personal funds, but this is running out quicker than hackers can operate, and it's probably not getting better with more and better AI tools. So at some point in time, Anthropic will release Mythic, and and others will also have better tools. So we can rather expect more of those hacks than less. And yeah, I'm not that super optimistic for DeFi in 2026, to be honest.
Yeah, it was a good promise, but I mean, the only way out seems to be like, either crazy financial engineering or finding a way to introduce all the dirty words that we don't like from TradFi, like circuit breakers and KYC and delays, withdrawal delays, and all these kind of things. Because we thought we had multi-sig, but some people aren't even using it to secure $100 million treasuries. They have single signers, or their signers are all retarded, or they have 2 or 5. Like the basics aren't being kept to. So we need some sort of fail safe somehow. So that's why I agree with you. I'm not bullish on DeFi I think it needs to grow up. But on the other hand, when I think of DeFi, I think of a lot of, when I was getting into crypto, I was very idealistic at first. And for the early days, when I try to sell people on any product or any service or at any company I was working with, I'd always resolve to the ideology. It's permissionless. It helps you. It's peer-to-peer. It's more inclusive finance. No one really resonates with that. People want to see new use case, novel ways to use it. So when you tell people, oh, you can put your stock and lock it up and then get yield on that stock, like that start to speak to people. So I think the utility of DeFi can be very impactful for the the RWA sector, for more of that. It's crazy story. And Aram just posted the snapshot of the EtherFi. Let's share that to the screen, and let's see.
What's the interesting thing? As of yesterday, I think the majority of small users, quote unquote, they voted no against this proposal, and then there was this whale. So total, there has been like 3.2 million votes, and this whale came with 1.9 million votes. And then there was another whale came with about 650,000 votes, and they completely swinged the vote. And you can see, right? Essentially, like, it's kind of decentralized, but it's like, yeah, you know what? There's no way. I'm just going to come and die. There's no way you can have. And you can see the no was basically dominating until this one big vote just before the closing. They just came and voted, and then now it's the proposal is first. So this is a good decision to be made, but it again goes on to show that it's probably an insider. I can probably guess who that person is. That in a lot of protocols, insiders basically have large control. In most cases, it's absolute control, right? So this is the first point in most of these protocols, which are supposedly decentralized. And the second point that it's not connected to this that I wanted to make, and it's a follow-up to what Andre was saying, was when we have Mythos and all sorts of powerful AI, complete permissionless protocol, it may not be a good idea. For example, if we had some sort of checks and balances like, hey, you can't withdraw more than 50 million from Aave in one transaction in one day, you have to wait, we would have been able to prevent this hack, right? But now the hacker was able to withdraw hundreds of millions. And I think if you want to withdraw that kind of money, essentially there's like zero cap now. And I think going forward, a lot of protocols for permissionless are going to ask themselves, do we need like zero cap complete permissionless, or we want to institute some sort of checks and balances? So even if there's a hack, we can kind of contain this and not let like the whole protocol be drained. And I think a lot of them in the future are going to start having some sort of large caps, which will not affect 99.9% of users.
Yeah, that was crazy. That's a crazy fund. I mean, they don't even pretend to be decentralized. It's like when it was Kim Jong Un winning 99.8% of the election. That kind of vibe. But it's wow, it's crime on the charts. They talk about there's no ways anyone, like once you've been involved in a few crypto projects, you realize like at the beginning again when I was naive, I would see like whale movements and I'd be like, oh, there's a buyer or whatever, but there's no way you can accumulate that amount of coin organically. Like that has to be from the allocation. We forget the pie chart of tokenomics, and there's 100%, and the public sale and the community usually get like 30-40%, and that rest of that other chunk is just divvied up to control the governance. This is absolutely cooked. Theater, decentralization theater. That's why the dog. That's why the dogs, on the streets, that's why they should go for Bitcoin only. And that brings me to the end of DeFi United. I think it's a super important topic, and we're definitely going to track that in the coming days. I want to just say something, kind of off script here. Something that just came across my table 2 days ago. The South African government put out the craziest draft resolution against Bitcoin. Essentially, what they're trying to do is they're trying to, limit your ability to transfer overseas. You need permission from the government if you want to send your Bitcoin overseas. They can seize your coin. They can take your private keys, and if you fail to give them your private keys, you'll be liable to 1 million rand fine or 5 years in jail. This is crazy. This is very draconian. It seems like we assume that the government will just fall in line with Bitcoin, but this goes to show that there's a lot of antagonism still out there. It's not going to be, we haven't won. Bitcoin is not won yet. We're still very much fighting. And I want to take it to Andre because, obviously you mentioned 3 aspects that determine, how the universities study these topics. You mentioned the tech, which we spoke about, and proof of work, and quantum. You mentioned business, which we covered a little bit. How about the regulation? What about that? Like, how does what you do? How does that influence policy? How are you guys interacting with regulators? Because obviously, having thinkers that are pro Bitcoin, that are libertarian orientated, obviously that is super important. How is that impacting the laws that get written?
I mean, at the end, everyone who has like a voice in the space, they can always comment new laws that are in preparation, whether that's like on the taxation side or whether that's on some other regulatory side. Like in Germany we have a relatively I would say favorable taxation. That's everything you do until 1 year. On the crypto side, no matter if it's like NFTs or fungible tokens, that's taxed according to your income statement, and everything you do after 1 year. So after holding for 1 year, everything is completely tax-free. And that's obviously a treatment that not everyone is comfortable with. So there's some battle about that, and some people of course, from the crypto community, they are very much in favor of that, and then some others that are not in favor. So there's some battle going on right here as well. And then, of course, in Europe we have the whole MiCA thing, which is now in place, and you have many crypto players that go for those licenses. So in Germany, in Europe, everything takes a bit longer, but once they are in place, it's really rigorous and really solid. Right, so it's not as fast as in the US or then as in like Singapore and some smaller nations. But once it's out, this is like the tanker that is then once grabbing speed, it's moving, right, and. At the end, there's just a handful of academics, I would say, that have a voice in that discussion, and the rest is like lobbyists from the financial industry that want to earn money right now in this sector. And at the end of the day, it's up to the academics whether their voices are heard, and that's also one of the reasons why being on LinkedIn makes some sense, right? And not just like discussing that in some Telegram group chats or on X. Because the regulators, they are not sitting on X, right? So they are not participating there. Or LinkedIn may be more important. And then also like, just getting the message out, getting it spread out with traditional media formats like newspapers and financial newspapers and the like. So you really need to work hard to get your message heard. Right? So it's of course the job of every researcher and academic to do that, but it's not that easy, right? You need to be close to the political circles. You need to be like in Berlin, in Brussels, and the like, if you want to be heard.
Yeah,
it's like everywhere. It's like everywhere, right? So it's not different here.
I think you're in the academia, you have a role to bridge. Like, there's obviously the way the politics is being created in the closed rooms with the lobbyists and the decision makers, and then there's the street. The kind of a big reason why Trump at least came out as pro crypto, even though he hasn't really done much in the way of actual actions. A big reason why is because Pennsylvania, Wisconsin, all these swing states actually had a lot of crypto voters that were interested in this, and a lot of them were even single issue voters that only cared about crypto. And in academia, you're interfacing with both areas. Like, I think, especially in my country, I see in Israel, there's some work going on with the politicians, and now they're trying to start a grassroots campaign. But without without the public, you really won't be able to really pass these reforms. Like, the public needs to care about it. People need to know that if they pro crypto, they'll get votes. If they'll anti crypto, they'll lose votes. Simple as that. That's how, at the end of the day, votes equal power, and that's what a politician feeds off. Right? But on the other hand, like, Bitcoin is supposed to be, around. It's supposed to help us get around politicians and governments and banks. We're supposed to love it for what it's worth. For the purists, like what Andre mentioned earlier, with proof of work and difficulty and knowing it and loving it for that. Aram, I want to kind of end off with welcoming our friend to LinkedIn. He just got active over here, and end off on that. Like, I'm very bullish on LinkedIn, and I'm going to start being more vocal about it. I think it's an untapped opportunity right now. We're seeing, teams in Web3 are spending millions. Last year on InfoFi alone, on Kaito, I think distributed around 200 million. They had the TVD metric, total value distributed, was around 200 million, right? The last time I checked. That is crazy amount of money. Not even a fraction of that is being spent right now by Web3 brands on LinkedIn. And I think this is the craziest anomaly that we have today, because LinkedIn is where the decision makers that Andre was talking about are. LinkedIn is where your buyers are. LinkedIn is where the JP Morgan or BlackRock decision maker that might integrate or partner with you on whatever stablecoin, neobank payment infrastructure for RWA that you're launching, and you need a presence on LinkedIn. So I'm very bullish on that. Like, I'm getting more excited as I speak. Aram, maybe kind of tell us your take, because you've been pushing it for a while, and also like kind of where you see LinkedIn right now in the landscape of a company's budget, a company's marketing plan. Like, how can
Right.
Web3 brands win on LinkedIn?
Right. So it really relates to some of the key trends that I'm seeing in crypto, right? What are the best use cases we're seeing in crypto? So the first one you mentioned, a lot of the digital asset treasury companies like Strategy and Bitcoin, Ethereum, Solana, whatever, all these ETFs, right? They're all institutional capital coming into Bitcoin. And if you look at the retails, they're not really pushing the price. It's mostly these big institutions that are propping up the price now. And most of these institutions, they are coming from a traditional Web2 background, and LinkedIn is their playground. They might have some presence on X, but they're not the same degen crypto native crowd that originally started the crypto. So that's first. Second, stable coins. Again, stable coins started as primarily a tool for traders, but now it's been adopted by businesses, by retail, by banks, and essentially every single financial institution at some point is going to run on stable coins, right? And again, what started as crypto is becoming the de facto plumbing layer for the TradFi. And again, these guys are Web2 and they're primarily on LinkedIn. And then you have the even much bigger RWA, real world assets. We have talked about it in our first show with the Canton Network. You have trillions and trillions of assets, treasuries, private credit, equities, commodities, whatever. All of these things are coming on chain. And again, that's real world assets. And again, a lot of these stakeholders, they are on LinkedIn, right? So those are some of the biggest trends that I see. And then there is the AI, which is, again, traditionally it started as a non-crypto movement and now it's been adopted by crypto because AI agents live, like they're the best players to live on chain, right? So all this tells me that it started as a niche movement on X, which was highly technical, crypto native, and now it's spreading, it's going mainstream, and the mainstream audience lives on LinkedIn. This is probably the best platform for the B2B businesses. If you want to get leads, if you want to tap into the real buyers who have deep pockets. And I'm super bullish on LinkedIn. And I think the mind share, or whatever you want to call of these crypto related conversations on LinkedIn, not pump and dump, but real conversations with real stakeholders, is only going to grow. So that's my take.
Yeah, Andre, how are you finding it? Like, what do academics, I honestly don't follow a lot of professors in any field. So how are you finding it? What are you trying to get out of LinkedIn? Like, how's it different to X or any other social platform that you've been on?
I mean, I've been on X like since 21, even though I made my first account in 2009, but never really had spent some time over there. You also have a huge signal to noise problem on X, because people are getting paid to post and people are getting paid by protocols. You have just tons of content, and much of that doesn't really bring much value. And I would say the signal to noise ratio on LinkedIn is way better because you're not getting paid to post on LinkedIn. You can make a living once you're large enough, but all the smaller creators or the smaller accounts, they're not getting paid, and that shows. And you have to be doxxed, right, on LinkedIn, so that makes a whole lot of difference. You don't have the spot issue on X. So, and I also see that retail is not as important anymore. I mean, we have seen last year, let's say on Pump Fund, that retail is of course important, but I would say for the important assets, like really Bitcoin, Ethereum, RWA, stables, that's more B2B now than it has been ever. And it will also move into that direction even more. So if you just see what's happening until 2030, I'm also fully into like B2B will be more important. So having a presence on LinkedIn makes a whole lot of sense. That's also why I shifted some of my attention to LinkedIn. I'm not sure how many creators will really be able to profit from that. So I'm not into this how you can monetize in LinkedIn games. I'm not. I just don't know how people do that. So maybe Aram, you can share a bit more on that. But on X, we had like thousands of creators who were making money with these, like what Dudu was saying with Kaito and Infofy, and you don't have any like that. At least I'm not aware of that on LinkedIn here.
Bro, some guy just joined and he asked about the quantum again. We all spoke about the quantum. Long story short, the risk is overblown. Bitcoin will survive this FUD like it survived every other FUD. But I think to your question, Andre, LinkedIn is very different game to X because X is a lot more volume game. Like you see a lot more impressions on a typical post. People are posting 4, 5, 6, 7, up to 20, 50 times a day. LinkedIn is more curated, more less posts per day, one post per day. More it's more about like proximity to high trust, to high signal, and that results in people LinkedIn. When brands spend money on LinkedIn, they pay LinkedIn, and LinkedIn's done a good job of that, I guess, because they've kind of captured all the deal flow. So brands will run ads on LinkedIn. I've seen a lot of brands run ads on LinkedIn, but when it comes to doing sponsored posts or doing affiliate deals with creators or doing InfoFi type stuff, the amount of brands that are doing that drops significantly. So I think that's why I see a challenge and opportunity here, because the challenge is that it doesn't exist in scale yet. Yeah, and the opportunity is that it doesn't exist in scale yet. Yeah. So if you're a software company, if you're a security company, or you're an audit company, or you're a custody company, or you're doing any B2B stuff in Web3, you have an opportunity yet to come in with I'm just throwing a budget of a few tens of thousands of dollars a month, right? Which would go towards like one or two influencers on X, tier one guys, and you can come in and completely take over the timeline on LinkedIn. Like the budget is so low that you need in order to come and take over the timeline. And I promise you, the first brand to do that, the first brand, B2B brand, whether it's security or custody or market makers or lawyers or whatever, to come and say, we're putting $30,000, a month on LinkedIn. We're going to try it for 3 months. The first one to do that will take over the timeline. With $100,000, you'll get back, multiples of that in deal flow. I'm almost certain of that fact, and hopefully we can prove it.
Ram, what's your take on that?
Yeah, I think on LinkedIn, you need to have some sort of an offer or a business to make money. On X, you can make money by being a creator, by promoting some things, by pumping and dumping some tokens. On LinkedIn, you need an offer, usually a legitimate offer, and you need to sell it. So it's a little bit of a different dynamic. So if you are a single person, single creator, it's a little bit hard to monetize it. But again, if you're a business and you have a product and people need it, it's much easier to scale. So it's a bit of a different jungle, but I like LinkedIn more because it's hard to get started. But once you get started, once you have this initial product market fit, scaling from there, it's much easier. And also you have like these sales specific tools, so essentially on X, most people do the inbound, right? They just post content and they get leads, or they just post for, essentially they do advertising or they get leads, right? LinkedIn has this powerful tools for outbound. If you look at X, the number of spam you are getting in your DMs is so much that a lot of people don't pay attention. But on LinkedIn, even though you have some unwanted messages, it's still possible to do customized outbound messages to your customers. And that's working very well. And that's what I've been doing for my clients. So I think that's another powerful tool. And you have a lot of these tools which integrate well with LinkedIn, from Sales Navigator to all sorts of CRMs, and I think it's just a good platform for like traditional sales, and this works very well for a lot of these companies operating at the peripheries of stablecoins, RWA, and whatnot.
Yeah, I think you're right about the offer part. Like, LinkedIn, it's not about the LinkedIn game isn't an impression game. It's not it's not a game of trying to get 100,000 wallet holders to buy a coin. It's a targeted game. It's just, sometimes just people would pay tens of thousands of dollars to reach one decision maker, for one intro, because that intro can pay them back 10x. So that's kind of what's important to keep in mind here. And yeah, but like anything else in the world, LinkedIn is a social network. I would have never met Aram if we're not on LinkedIn. And now not only do we, shoot the breeze together and do some work together, but we're also actually friends. And like that's kind of what you got to remember at the end of the day, that there's a person on the other end of the of the screen, and that person, they want to have a laugh, they want to learn something new, they want to be first to the information that can change their lives, that can make them some money, that can help them avoid pain or gain some pleasure. And if you're giving that to them, then you're doing the world a service. I think there's no better service than a creator. So hopefully LinkedIn will catch up, and hopefully they'll boost it. But I definitely see a trend forming, especially as more institutional players come into Web3, as more universities offer courses in Web3. This question about the quantum, it's a decent question over here. But should they be considered a systemic risk to the market's price floor? Just in 10 seconds, let's answer this guy. Starting with Aram, we'll end off with Andre, and then we'll say goodbye.
It's hard to say, but 10 seconds maybe. That's my 10-second short take.
Yeah, mine is no. It's definitely not. Even if there's a systemic risk, means that it's completely destroyed, and even if the market floor price, the price floor drops a bit, it'll go back up. That's a little bit more than 10 seconds. Over to you, Andre.
Yeah, obviously, more supply means lower price. So it's you don't need to be a rocket scientist. So if strategy is buying 1 million BTC, it's better for the price than someone selling 1 million BTC. But I mean, the person sitting on the 1 million Bitcoin wallet, if they just dump everything in one day, like Germany sold the 50,000 Bitcoin back in the days, it's just not making sense, right? So I'm looking forward to that. I think that's one of the few obstacles that is between us and a good future. And Bitcoin will survive this, whatever it takes.
Awesome. Thank you, gentlemen. That was a great episode. I had a ton of fun. I learned a ton. And it's great to hear from someone smart and accomplished in academia like Andre. And we have it right when we're looking at Bitcoin and when we're thinking about Bitcoin and kind of focusing on the first principles. And that's, I think, one of the biggest problems in the crypto space today is a lot of people overcomplicate it. You get loops and staked and liquid restaking and prediction markets and that's all fun. Like, I'm not ever going to tell people not to experiment with that, but just you have to have the correct mental model that puts Bitcoin in a category of its own and then looks at everything else like a fun game, a cool experiment, and nothing more. So thank you, Andre. Thank you for coming out and teaching that to us. Valentin had a good time. So it seems like we did something right. And Aram, thank you as always. Great to have you back in your natural habitat in Bangkok. Enjoy your run, mate, and we'll see you guys soon. Peace.
Thank you.
Cheers.
Take care. Stay
Bye-bye.
safe.